Hi everybody, today is May 15th, 2015 on Friday, and this is the Middle Class Investor. Thank you for taking the time to come in and watch the videos. Well, we had an up week in the market, as probably many of you know at this point, and the market, you can't see it. If you were looking at intraday, there's just a lot of overlapping chop back and forth as it meanders its way up to this resistance area. And it's looking very, very tired. We did get a new intraday high from we actually didn't close. We didn't actually get above this high, but we eclipsed this week's high. So last week's high we eclipsed that, but not the previous week. So we still haven't made a new high, and we're looking for the market to move up into this 2135 area, probably max. It could actually break out a little higher, just because this is a pretty tight channel, and usually you can take like the range from high to low on the channel and add that to the breakout. So we could see as high as like 2160 or something along those lines. But I wouldn't bank too much on it. So the market looks very, very tired here. It looks very it looks like there's a lot of people selling shares, as the market fluctuates in this little bitty range. There's people sneaking shares out of the market. So that's what it looks like to me. It doesn't look like it has the upside momentum that it once had. There's a look at the larger chart, and you can see this. We're approaching this trend line here that connects to 2000 and 2007 highs, and I doubt we're going to get up that high again, but we do have the MACD, or the stochastic, is turning up a little bit here. The MACD looks like it's kind of rolling over, so we've got kind of a disagreement between those two oscillators. The 10-year Treasury, basically the 10-year Treasury over the last 3.5 months is up. It reached a high of about 41%. So from low to high was about a 41% increase. So interest rates are doing pretty much what we thought they would do. Now, it looks like we're going to get a pullback here, but it might be brief. It might just kind of chop around a little bit here and then take off again to the upside, or it could pull back here to our 1.8 line. We'll just have to watch it and see. But if you get a close next week below this candle here, let me zoom in. This is known in the candlestick vernacular as a shooting star, this candle right here. And if we get a close next week, something that looks like this, where the close is right here, then this will be confirmed as a shooting star, and that's usually a topping pattern, and so you should see the market continue to pull back in this direction if this is in fact a shooting star. So looks like we're going to have a little bit of a pullback. It could be actually very brief and then back to the upside. But this is a pretty bearish looking candle, so if we get a close, look for the market to pull back even further. If we don't get a close, below that, let's say we just get something that looks like, I don't know, this, okay, then I would say that's less bearish, and then you would likely see something that looks like that the following week, and then that. So I know that's confusing sometimes when I talk to you about this or that, like there's no definitive way, and really in the markets there's not. I mean, you really don't know which way to go. That's why we look for things like this. Like we have a low, we have a high, we have a higher low, and now we have a higher high. So we we've got the beginnings of what looks like an uptrend. So the odds are, let's just talk about the odds. The odds are that the market doesn't pull back any deeper than, say, this area right in here. And the reason is because this low is higher than this low. And we did get a high above the previous high. So, excuse me, it looks like the market is wanting to make an uptrend here. So we shouldn't see a pullback much deeper than this area right here. And that's why I say what we could see is just kind of some candles that look like this, and then you get, one like that, and then one like, one like this, and then it's back off to the upside. So, and those little subtleties you just get used to seeing over time. The more you mess with the market, so I'm just used to seeing that. That's why I can say, well, if it does this, then I want to be long, but if it does this, then I want to sell my long position. And you do that pretty decisively. Let's look at the VIX. The VIX still chopping toward the lower end, and still looks weak here, following this down channel. And looks like it almost looks like it wants to make a low below this low. So that'll be interesting. If it does, I suspect you won't have it close like you did here. See, the VIX actually closed fairly close to the low here. But I'm guessing that if we get another, down candle, it'll probably look more like, something like this, where the candle's up here and it ran all the way down here, but then turned around and ran up. So you might get something like that, but I doubt you're going to see another close down below here. There's just not much room for the VIX to move lower. This is a historically low area for the VIX, and there's a lot of risk in the market. I'm gonna read a couple of things out of the financial forecast that I thought were little factoids that you're just not going to hear anywhere else, and so I thought we'd just take a moment and read some of those. I highlighted them in the May report, so I think it'll be interesting to you guys. Let's look at the Euro-US dollar. That's looking a lot better than it did, and you can see here it's wanting to take out and move higher. And, really in the near term, and I know we don't have much further to go here, but the near term, this is kind of resistance area for the euro. But given where the oscillator is, it might hit that, pull back just a little bit, and then continue higher. I don't think that's really going to turn the euro over at this juncture. But it could be wrong, so you trade what you see, and you invest how you see the market. A lot of this other markets that we look at are just for informational reasons. The focus really here in this YouTube channel is to focus on the S&P 500 and its ETF counterpart, the SPY. And the reason I want to do that is because that's what your 401ks, they basically move with the SPY. So if the SPY is up 1%, then your 401k is pretty much up 1%. So that's why I want to focus on the SPY. And now we can look at these other markets, but the reality is, for you guys that have 401ks and IRAs, that's how your account's going to move. So I want you kind of thinking along those lines. Germany, Germany looks like it's certainly running out of steam here. You can see where, basically, you can basically see right in this area where, it's kind of been Sorry, I can't get my mouse right where I want it. There we go. You can see that it's in this area, it's kind of been sideways right through here. So a lot of chop in here in Germany. So I think the key is what we want to see. If this trend line is going to hold, the first thing that we should see is a break above this high. So what we want to see in Germany, if we're long in Germany, we want to see, candles keep making higher. We want to see a break above this high. Now, once it breaks this high, you could get a pullback, like so. But we should stay then above these lows. And then you should get, something that kind of looks like this, where Germany keeps going up to the upside. Or it could actually pull all the way back, to the trend line here. But I don't know. To me, that doesn't look like that's going to happen, because this is a pretty long. You can see here, this is kind of an initial move up, and this run here is pretty long before it pulled back. So usually that really long one is in the middle of the trend, and which would mean to me that there's not much left in this trend. So I think this scenario right here is more likely. You get a pullback to the trend line, and then potentially lower than the trend line. But again, we don't know. You'll hear me say that a lot. We don't actually know the future, and in fact, nobody does. So don't get too hung up on people that predict and things like that. We are doing a little predicting here, but that's because the bond market's on a 30-year cycle, 30-ish year cycle, and we're 34 years into it. The market's been in a bull market for going on 7 years, and that's real unusual. So we are certainly much closer to a top than we are to a bottom. And so the risk is not to the downside, the risk is to the upside. I'm sorry, the risk is to the downside. There's not much gain to the upside. So that's one of the reasons I started doing this this YouTube channel, because there's just a lot of people out there that really don't know what to do, and so as a result, they do nothing. Right here, we're looking at Japan, and Japan, all along, we've been talking about Japan getting into this resistance box up here in blue. Looks like it's well on its way to do that. So, we'll look for Japan to hit up in here, and then we should see at least a pullback into this area right here, either before Japan goes up, or before you get some sort of corrective move against this, and then a down move. We can talk more about that as I see these patterns develop, and then I will point them out to you. But here again, you can see this long section in the middle of the trend. So the trend started back here at this low, and you can see here we had move up. We have this corrective move back, and you can see how long this is right here. This is usually in the middle of the trend. Okay, so what does that mean? That means you could have maybe one more move that looks like this in this move. So in other words, you could have a pullback, and then you could have one more move up into this area before this particular trend is over, and we likely come back and retest this area here as we pull back. So hopefully I didn't confuse you with that. Maybe that's something we'll go into in more detail. I haven't given it much thought, so we're not going to do it today. The UK is actually trying to poke out above. So we had this resistance box on the screen, and we've actually got to close above this resistance box. So next week, if we trade above this high, so if we trade up here, then this box is no longer valid. Okay, so if we trade above this high, if we close next week above this high right here, then this box here is no longer valid. We need to take it off the screen. Because the market moves from pivot to pivot, from pivot to pivot, if we're looking for a certain pivot area to be resistance and the market goes through that area, well then clearly that's not resistance and we need to take it off the chart. So sometimes these pivots hold. So let me zoom in and show you what I'm talking about here. You can see that the market moved from here to here, okay? And then from here to here, and see this is a pivot right here, this little area right here. This is what we call a pivot. I don't know why it's not making a box. Well, there we go. There's a pivot. And then from here up, see actually there's another pivot in here. You can see it right here, like this. But if we get a close up above this high, then this pattern, the way it looks, is no longer valid, and we'll likely see even higher prices from a close above that high. Again, I hope that's not confusing. I'm trying to give you a little bit more insight into what I see here. And maybe what we'll do is we'll go back and look at the S&P 500 and just spend a little bit more time talking about that. The problem is it's so choppy right now. There are no pivots. I mean, you just can't hardly see anything there. So maybe we won't do that today. But let's go over here and look at gold. So we're looking at a weekly chart for gold off the screen here. Let me zoom in here so you can see. You can see here back in October of 2001, 2011, 2012 actually. October 2012, gold hit a high here of 1798, and we've had this long pullback, and I drew this little tight band here along this descending trend line, and you can see here we had what's called a breakout. So we had in a pretty strong move. I mean, look at this candle. So we had a breakout and then an immediate pullback, but again, a higher low. So hopefully you can see that here. This is the future, by the way. So we have a low here at 1130. You can see that right there. And then this low here looks to be about 1141. And see, it's higher than this one back here. So this is, even though it chopped and it pulled back really hard, this is still an uptrend. So if you're in gold, kind of want to hang on to it. Now I do think there's going to be lower prices for gold going forward. I just don't think they're going to be this year or maybe even next year. So in the near term, what I would look for gold to do is to come into this resistance area here off of this high. So you got kind of a resistance box in this 1310 to 1330 area, and that's where I'd look for gold to go. Now if we get a little pullback early next week, maybe if I can get a pullback into the midpoint of that candle there, I'll probably be a buyer again. Come in and buy right here and look for this to move up to this 1320, 1330 area. That would be my trading plan for gold. Let's look at the dollar. The dollar, it's interesting. You know, when we were first, a couple weeks ago, it looked like the dollar was going to just stall out on the top of this trend line. And lo and behold, it's pulled back right into our resistance box, which is interesting. I mean, we did have this drawn on this chart, I don't know, several weeks ago. Maybe even back in this area. We had this drawn on the chart, and we were looking for the market to pull back into this area before resuming higher. Now, you know, the dollar's a crowded trade, so I mean this could actually end up pulling back even further before it resumes higher. But kind of everybody was looking to flood into the dollar, so when you have that much activity in the currency, it could fluctuate actually quite a bit. So we're probably not as focused on it as maybe other people might be. So let's go over to NinjaTrader and let's look at the ES. The ES is the future for the S&P 500. And one of the things you can see here, let's see if I still have it on here. I don't have it on here. So one of the things you can see here I did is the nature of this run up. Let's look at a daily. Is you kind of have this choppy ABC. So you got an ABC. Actually, that's not the right. Yeah, so really I need to go back even further. So really starting here, you got an ABC, and then you got an ABC down, and then you got an ABC. Okay, so that's, let's call that 1 up to here, 2 here, 3 here, 4 here, 5. Okay, and then we go to a smaller degree trend, we have another 5. So now let's zoom in on let's say a 30-minute chart. And notice how this is kind of a similar pattern. You got an ABC, and then an ABC, 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 and then ABC. So, the market follows a very structured kind of price flow data. And it's probably from, what we see people wearing, what we see women wearing, for example. However it shows up in here, it's pretty magical to me. I mean, it's pretty amazing. Let's look at crude oil. Crude oil is, up strong, and we talked about crude oil probably needing to move into this wave 4 box, and likely won't stay there for very long, and you'll probably see a sharp rejection for those prices right down into, the below 40 area. So what else do I have on NinjaTrader? Bonds. You can see bonds look like they want to rally here. We've got an ABC in bonds that was on a pullback, and it looks like that pullback is complete for the time being. And let's see, we'll just click on this. How come that didn't work? Got to be smarter than the equipment you're working with. Okay, there we go. So we're looking for, if this breaks out above this area, we're looking for, bonds to go up into the 165.30 area, and that's a pretty good trade, which is one of the reasons I'm not in it. The risk tolerance is too high. What else do we have in NinjaTrader? We've got gold. Well, my gold charts are a little bit messed up, so I don't know how useful they're going to be. But you had this really strong kind of ABC move up into this area. And then had ABC, ABC, ABC. You could get a very complicated ABC pattern out of what I see here. And if we do, then there's not much to do other than just, do the best you can do. I think what I want to do now, I'm sorry about the long pause. I'm sitting here thinking about the time. I'm looking at the time. I'm looking at these charts. Let's look at the DAX real quick. You can see the DAX kind of ran into a 5-way pattern here on a daily chart, and it's pulled back. Looks like to me it wants to go higher again. So We'll look for the DAX to move up above this 12,414 area, and then probably start to chop down like the U.S. markets are doing. All right, I just want to read a few things out of this financial forecast that I thought were interesting. I've highlighted. Everybody knows, we remember a few years ago there was a lot of news on Greece, and Greece is starting to get back into the news, although not on the mainstream news yet, I don't think, but certainly in some of the more established financial news. So there's a note here that says, according to Daniel Roberts, the Ross Consulting, Greece has enough cash to make its April debt payments, but not May's. Okay, so we're in May, and this guy, he says that Greece doesn't have enough money to pay May's debt payments. So that's probably going to create some volatility in the markets, probably have an effect on the euro, and we'll probably see the dollar moving around a little bit, which should cause our markets to move around a little bit. So keep an eye out for that. Now this guy is talking about China specifically and defaults in China, and they've been looking at this for a while. It says, we remarked on China's incredible expanding debt burden last month. McKinsey noted that since 2007, China's total debt has nearly quadrupled. You thought ours had gone up a lot. Theirs has nearly quadrupled, rising from $7.4 trillion in 2007 to $28.2 trillion by mid-2014, rising from 158% to 282% of GDP. So that is significant. And many of you seen on TV the empty cities in China, and you're probably hearing about how Chinese people are trying to buy real estate over here. A lot of them are trying to get their money out. They probably see the writing on the wall and trying to take some of that money out of the country before it's too late. Here, 70 million empty high-rise apartment units. I mean, that's just unbelievable. We mentioned last month about the National Association of Credit Management. They were talking about credit application rejections, and that was the biggest spike on record. Let's see. This says this is credit crunch territory. Many companies are beyond slow pay and are faltering. The quantity and quality of bond issuance over the last 3 years signals the potential for a credit washout that is even more severe than 2008-2009. Wow, that's really saying something. So, here's another note. Back in 2006-2007, 28% of debt being issued was B-rated. So 28% back in 2006-2007. Says hedge fund manager Stanley Druckenmiller. Today, 71% of the debt that has been issued in the last 2 years is B-rated. So, not credit-worthy borrowers. Here's another note along the same lines. Back in 2006-2007, less than 20% of the debt issuance was covenant light. The number is now over 60%. The default risks are much higher than lenders imagine, as much of this corporate debt rests on the backs of consumers who are on the precipice of their own credit meltdowns. So that sounds not so promising. And this is all just, too much debt, too much credit. That's what all these little headlines are about. This is an investor psychology one. It says, according to a March survey of 20 strategists by Bankrate.com, 85%, so think of that, I mean, do we ever get 85% of the people to agree on anything? 85% expect the S&P to be higher than today by March 2016. The group is particularly enamored with the European shares. 80% said they expect to deliver the best returns over the next 12 months. So, I don't know. I've never seen 85% of the population agree on anything, so I thought that was kind of interesting. This is another one. This talks about the, let's see, where did I write that? Where did I highlight that? Okay, here it is. The figure, and you can't see the figure, I apologize, shows the aggregate balance in NYSE margin accounts once total margin credit is subtracted from cash accounts. Okay, so what they're saying is there's a balance. People have a certain amount of money in their margin trading accounts. And margin credit is subtracted from their cash account value. So, for example, let's say their margin account had $100,000 in it, and their margin credit was 50% higher. That means that the real money, they're subject to potential loss in portfolio of 50%. And what they're saying here is that the balances are actually negative, $191 billion negative, which is a record high in total net debt. It's 48% higher than it was in 2000 and 240% higher than it was in 2007. So a lot of these regulations and things that we've been hearing the politicians talk about, basically none of that happened. These guys basically said they were going to do all this stuff, make sure this never happens again, blah, blah, blah. Bottom line is they haven't done anything. So, that's unfortunate, but that's politics. I mean, we ought to all be, made fun of thinking that politicians can actually solve all these problems. They're the ones that created the problems in the first place. They don't know how to solve them. That's why they created them. Anyway, those are just some interesting statistics that I saw. There's a few more in here, but those are the ones I really wanted to mention to you. There's talk in here about foreign buyers buying U.S. real estate, mostly Chinese people. It's just an interesting time. A lot of people are talking about how this really resembles 1974, 1973, 1974. And if that's the case, then we should see much lower prices. But what I would say before we talk about lower prices is I would expect the S&P 500. Let's get back to the S&P 500. So that's a weekly chart. Let's go to a daily because the price action is so narrow right now that it's hard to really see what's going on. So you got the old high right here, I guess. What is this high? This high is, well, let's go to the S&P 500. I'm on the SPY. So the old high is right here, and we did close above that high. So the old high is right here, and you can see we closed above that high today. So given where the MACD is and the stochastic, I would look for the S&P 500 to run up a little higher, something like that. Now, these are days, so not weeks. So that would be Monday, maybe Tuesday looks like something like this, and then then you get something like this, and then you could have something like this pretty quick. So we'll just keep our eyes open. We can't predict the future, but certainly if a certain pattern or look shows up, we're gonna jump on board and see if we can't make some money to the downside. That is about it this week, everybody. Don't forget to tell your friends and family members about the Middle Class Investor. If you have somebody that's a Twitter type of person, I'm also on Twitter. The address there is the @ investor class, and the little app is called Middle Class Investor. So I hope you're getting a lot out of these recordings. Certainly, if there's some more that you need to get out of them, and there's some things you want me to talk about, just leave some comments in the comment section, and I will be happy to work that in. Again, I want to thank everybody for coming in and viewing the videos, and we will see you next week. Take care, everybody. We'll see you. Bye-bye.